Accounts define the structure of your financial system. We're going to talk a little bit about what accounts are used for. They describe the movement of your resources within your company. Accounts are used in transactions to record your financial activity and also give you the ability to summarize it in different reports in CenterPoint. It also represents a financial picture of your operation at any given time using the balance sheet, the income statement, and a whole list of other reports. But the financial picture is only as accurate as that data that is going into the accounts. The accounts are the core of your financial data. Every transaction will have accounts. And so we're going to talk about the hierarchy of accounts, and at the very top level of that account hierarchy is account types. They are predefined, and CenterPoint follows the accounting standards. The balance sheet account types are assets, which represent items that you own, liabilities, which represent debts that you owe to somebody else, your equities, which is the net worth of your company and represents the combination of investments and accumulated net profit and loss. And then on the income statement account types, we have revenues that represent the different ways you generate income, your cost of goods, which are specific expenses that represent direct costs of generating that income, and then expenses, which are the costs of operating your company, and then other revenues and other expenses which are not directly related to generating that income. All of the income statement account types affect retained earnings. That's how the balance sheet is updated with your income statement account types, is that your revenues and other revenues are going to increase retained earnings, and your cost of goods, expenses, and other expenses are going to decrease retained earnings. That keeps your balance sheet balanced. CenterPoint will always make sure that your transactions that are entered make a balanced transaction. So now let's take a look at the overall account hierarchy. So we've taken one account type, expenses, and we've shown a display here of your different levels of accounts down to the accounts that you're going to be posting to. So after our account type being the highest level of the account hierarchy, next is our account categories. Every account type will have a list of account categories. Those are also predefined and describe agricultural accounting practices. We've given an example here of 3 different account categories, but expenses has a very long list of different account categories. And the account categories are used to organize the accounts in each account type. So the categories describe a specific purpose for that particular type of expense and expenses. And every category will have a list of account categories. Account categories also define different characteristics of the accounts that are in that account category, and we'll talk a little bit about that when we go to account categories in a little bit. But right now, after account categories, we're going to talk about the different levels of accounts that you can have under each account category. So we have an example here of utilities expense, and we are using 3 different level 1 accounts under utilities expense: electricity, disposal, and communication. But this user wants a little bit more detail for the communication. So we have a couple of different levels being used. We have internet service as a level 2 account and cell phone as a level 2 account. And then on the cell phone, they want even a little bit more breakdown on whether the cost was for cell service or cell devices, and those are level 3 accounts. When you do your transactions in CenterPoint, you will always be posting to the lowest level of that account. So in this case, under communication, we won't be entering transactions to communication, and we won't be entering transactions to cell phone. We will be entering to internet service because that's the lowest level of that account. And for cell phone, we'll be entering it to cell service and cell devices. When you do your reports, you can do them at your different levels, level 1, level 2, level 3. If I'm doing it at level 3, I'll be seeing the activity in cell service and cell devices. If I roll it up to level 2, I'll be seeing cell service and cell devices under cell phone. And if I roll it up to level 1, I'll be seeing all of this activity to communication. And still you can roll it up to the account category and see all the activity to all 3 accounts in utilities expenses. The different levels that you have in your different account categories is up to you. You don't have to use the same level in every situation. So under insurance expense, you can see we're using all level 1 accounts. In fuel, we have 2 level 1s, and we've split out one of the level 1s into level 2. It really just is matching up to what you need. The account categories are predefined, but the accounts are all going to be matching to what you need. You can name them whatever you want. You can structure them how you want. So now let's go take a look at our account categories. We're going to go up to Setup, and then Accounts, and then Account Categories. This is a list of your account categories. Currently, it's being ordered by the sequence, and the sequence is defining the order that you would see these different account categories on balance sheets and then down through income statements. So you can see first we're seeing assets, liabilities, equity, and then it starts with revenue, cost of goods, and expenses. You can order this list however you want by clicking on the column that you wanted to order it by. So I could go to account category, and then it would order it alphabetically by the account category. All of the different account categories have different purposes, and a lot of them will have the same purpose, but are just organizing that group of accounts. But for example, our cash account category has a specific purpose of any accounts in a cash account category are the accounts that you would see in a lookup in bank account when you're doing a cash payment or a cash receipt. If we looked at accounts receivable account category, any accounts and accounts receivable will be the account that you would see in a customer invoice for the receivable account. And the same for liabilities. Under liabilities, there is an account category for credit cards and an account category for accounts payable. You will see those accounts when you're doing a vendor invoice for doing payables or putting in credit card purchases. So the different account categories have different purposes. Some of them also store different details. If you're looking at a liability account category, for example, equipment loans, those accounts will store different details that manage interest and accrued interest. Or if you're looking at accounts under machinery and equipment, those accounts will store details for depreciation details. So our account categories have several uses within the system of how it's managing your different accounts. Let's look at one of our accounts, and we're going to look at raised crop inventory. And the other thing that account categories is doing is it gives you the ability to manage subledger account balance on balance sheet type accounts. So for example, we are in raised crop inventory. I'm going to go to the balance detail, and on the balance detail, we have the ability to store our balance when we have an inventory that's representing our raised inventory. We can store that balance by other details. And in this case, the user selected to store by production year and inventory location. That means that on this one inventory that's being increased when new production comes in, it's going to store those balances by the year that it was produced. So if you are storing inventory for multiple years, you're holding some inventory and selling it later, then you can store that by years and keep that segregated. And also this one's being stored by inventory location. So under each year, I also have a subledger balance for inventory location. So at any given time, I can see how much quantity I have left at the elevator, at the different bins, wherever I'm storing that particular inventory. So that's the other thing that the balance detail will do for you in account categories, and then also the templates. So the templates are also setting a default template for accounts in this particular account category. And templates in CenterPoint are used as a pattern to identify the accounts that need to post when you're using this account for the activity that you're doing. So in this case, we're in raised crop inventory. If I were to select a raised crop inventory in my receipt screen, it would pick up this template of DT cell raised inventory. And what that template is doing is has 4 different journals in it. It's increasing the bank, increasing revenue for the amount of the sale, but I also need to decrease the inventory that I'm selling. So it's going to decrease the inventory and offset that with my change in raised crop, and doing all of that calculation for you by you simply entering the quantity that you're selling and the dollars that you got for it, and it will take the inventory out at the cost of what that inventory price is at the current time. All that's being done for you by the template. So the template is managing the fact that it's making a balanced transaction, and the important good part about it is the templates make that data entry quick and easy for you. You only need the information you need. The template's taking care of the rest of it and making sure that entry is going to be balanced. So those are some things that the account categories are going to do for you. And we are going to address creating a new account in our next session of accounts and setting up a new account.